Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, May 19th, 2010. This morning we're talking about German political oxymorons, and I'm really going to stress the morons in that statement. Have you ever watched something unfold and you're sort of scratching your head in disbelief and you're wondering, oh my God, are they really saying that? Well, that's sort of what happened yesterday on the markets with Germany here. What they did is they basically made a unilateral decision to enact a naked short selling ban on some of their financial stocks as well as bonds, and what they're going to do is they're going to limit CDS purchases only to those who own bonds. So this policy isn't a bad thing in and of itself, but the problem is that they sort of, went about it themselves, didn't consult with anybody else in the EU, and what that did is that made the market very nervous, because now the market's thinking, oh my God, what are they hiding? Why do they have to enact this? What are they doing? And they came out and they didn't, give any real colors to what was going on, why it was, it was unbelievable. So this is sort of being viewed as like a political blunder in the marketplace, and this is not the first time Germany's done this. I mean, think about it. You're trying to inspire confidence in your currency. You're trying to let people know that things are okay. You've just enacted this huge bailout program, and then you sit there and you undermine it by taking unilateral actions and talking badly about the whole thing. Merkel came out and said, "Oh, there's a real problem. The eurozone, the euro could destruct if we don't do this." Oh my God, are you serious? Well, why would anybody put their money in the euro if that's your attitude, So that's, it's sort of like, oh my, this is unbelievable. So, needless to say, Euro sold off yesterday. We can look here. We're looking at the 15-minute chart just to give you an idea. Big euro sell-off down to around just above 121, which is I don't know how many year low, but it's up there. I mean, the euro actually came out at 118, so we're getting there. But that's sort of what's going on in the market right now. I mean, there's all this risk out there. I mean, this sent the risk currencies careening lower. Look at the Aussie versus Japan right there. That's a huge move down. That's a total unwind of a carry trade. Aussie versus USD, same deal. Consumer confidence came out in Australia last night, and it was the lowest reading that they've had in 18 months due to this euro problem. I mean, you've also got the potential slowdown in China. You got the Greek debt deal. You've got this new ban, and now commodities are selling off as well as a result of this risk aversion move. So that's what's happening in the euro. Same thing happened with the loonie. Same thing happened with the Kiwi. Let's look here at the Kiwi. Now the Kiwi's getting particularly hit as well because the RBNZ governor Bollard came out last night. And he said that New Zealand needs to reduce its budget deficit and should forgo growth prospects in favor of austerity to rebalance its economy. So he's saying that the gradual depreciation of the Kiwi would be desirable. Now, meanwhile, the market had been sort of setting up for the idea that they're going to raise rates mid-year. Well, that sort of kind of takes this off the table for now, and that's why you're seeing a big sell-off in the Kiwi. With the loonie, let's take a let's see, that was the Kiwi. Let's just look right there. Yeah, you can see what happened with that on the 15. Let's take a real quick look at the dollar loonie. As you can see, loonie's down as well. Canada's actually coming out with their CPI report on Friday, and if the inflation figures look they're getting up there, the markets now is nervous that they still may not raise rates in June as had been expected because of all this political and economic turmoil that's out there. So that's what's happening. The euro is basically ruling all the plays. Pound was lower to start the day, but it's reversed a little bit and it's gotten higher. Let's take a quick peek here. You can see on the 15, it's starting to pop back a little bit. But basically, the Bank of England policy meeting minutes came out, and unanimously they voted to keep a dovish stance, keep rates low, keep their bond purchase program in place, which falls in line with what they're talking about with their own austerity measures. Dollar was higher on risk aversion, as was the yen. Let's take a look here, dollar yen. Again, this is the 15 minutes, so we can see that. Now, CPI figures came in here in the U.S. Slightly different. We're expecting a gain of 0.1%. We actually got a decline of 0.1%. So it's not a huge move there. But what that's telling us is that we're not seeing any inflation yet. Kind of like I mentioned yesterday, we actually may be seeing some deflation. So, with all the government spending that's going into trying to prop up prices, people are starting to wonder if this is really going to happen. Now, the yen got a great bid. We can see this here on the Aussie versus yen. Again, unwind to carry trades. All right. They actually had industrial production numbers came in that were pretty good, and tomorrow they're going to come out with GDP, which is expected to show positive growth led by exports. All right, so this may help them actually to get their debt under control. Nobody really talks about Japanese debt because it's been around for so long, but they actually have a much bigger debt than any other nation out there. But yet they are known as the flight to safety currency. Go figure. So that's what's happening in the market. We've got this euro problem that's going on. Countries around the globe are talking about austerity measures. Hey, wait a sec, let's put the brakes on. Let's cut the spending. Let's get our budget deficits under control. The only country that really doesn't seem to be doing that is here in the U.S. We're plowing ahead. We've got all kinds of stimulus programs, and we've got low rates and incentives to buy things, and quite frankly, this is really becoming a battle of politics versus economics, and it's unfortunate because everybody likes politics and nobody really thinks about the economics. So as long as you keep the punch bowl out for everybody, everybody can keep drinking, everybody can stay drunk, and you just kind of keep pushing that hangover off till it runs out and the party's over. So I don't want to think about that at this point, but unless they can get this eurozone crisis under control, unless Germany can learn to either work with its partners or just frankly just stop talking. Just don't say anything and let the markets kind of do its own thing. That's the only way we're really going to see a little bit of confidence return to these markets. So right now, major risk aversion out there. Be careful. If confidence does return to the euro, we'll see gradual inclines, gradual declines in the euro, which is an okay thing. But if they keep coming out with news like this, you're going to see the euro fall at breakneck paces, and that could threaten the structural existence of the euro. So that's what we got today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.